All right. The balance of international payments. What is the balance of payments? No? So in the discussion of international trade and economics, understanding the balance of payments is very important. The balance of payments is an economic indicator. No? It tells about the performance of a country with regards to trade. It tells about its trading relationship with the rest of the world. So it shows all transactions between one country and the rest of the world for a given period. So usually, the performance of trade of a country for 1 year. Okay. Now the balance of payments uses theoretically, no, is based on the principles of double entry in accounting. No? That's why it uses the term balance. No? Double entry means there is a debit and a credit. No? Because theoretically, the items in the balance of payments, supposedly they cancel out each other, just like in your accounting books. No? The debit and credit has the same figure, and it overrides each other. No? So it zeroes out. Okay, so in theory only, the balance of payment is said to follow the same principle, no? Pero in theory lang to kasi the balance of payments, when it is presented, you do not have the debit and credit column. In fact, it is just one column. And what is shown is items that is either a plus or a minus. So items that is a plus means it is money coming into the economy. And if the item is a minus, this represents money coming out of the economy. Okay. So I guess the closest thing for it to be the same with accounting is when it comes to the cash flow statement. So it's like the cash flow statement. It tells you about money coming in and money coming out. Okay. So it uses the plus and minus signs to indicate the flow of money in the economy. Okay. Now, the balance of payments has two parts, the current account and the financial account. The current account includes trade balance, service balance, income balance, and net transfers. These are the components of the current account. The financial account consists of assets, no? Assets abroad owned by Filipinos, and assets in the Philippines owned by foreigners. This consists of domestic country-owned assets abroad and foreign-owned assets in the domestic country. Okay? And also net financial derivatives. Okay? So these are statistical representations. Now, in order for us to understand it better, here's a visualization of the components of the balance of payments. So under current account, you will see that it includes the trade balance, the service balance, the income balance, and net transfers. For the financial account, we have foreign direct investment, security investment, and net financial derivatives. This is the statistical representation of some items. Okay. So let's proceed and discuss the current account in detail. So the current account is composed of the trade balance, the service balance, excuse me, and the income balance and the balance of transfers. Okay. The trade balance is composed of the net exports, which is a plus, and the net imports, which is a minus. So the trade balance is the net of plus exports minus imports in other words, the difference of the exports and imports. Exports is a plus because these are cash inflow. This is money coming into our country. When you export, you are selling, right? So that's money coming into our country. While imports are a minus or cash outflow. Okay, so when you are importing, you are buying from abroad. So you have to pay for that. It's money coming out of the economy. Okay, so that's the trade balance. Okay. Now, service balance. It follows the same thought as the trade balance, except that we are talking about physical goods in trade balance. In service balance, we are talking about intangibles or services. Okay? Service balance is the net exports of service minus imports of service. So when we are exporting service, that's a plus. That's money coming into our country. And when we are importing service, that's a minus. No? So that's money coming out of our country. Like, for example, when we hire the services of IT personnel who will develop some, maybe some artificial intelligence program for our country, no? So we have to pay for that service. So that's money coming out of our country. Okay? So that's the composition of the service balance. No? Net exports of service and net imports of service. Now let me just tell you that in some texts or in probably in you have viewed some video tutorials or lessons about the balance of payment. You will notice that there are some minor slight difference in the components. Like for example, the service balance sometimes is not included because in the text or in their definition, in their discussion, service balance is already part of the trade balance. So may mga ganun bang differences? Kukunti lang naman. Okay? Because in reality, different countries also have their own way of computing for the balance of payments. Some items they include, some items do not, they exclude. Okay? So ayun. Just like probably you have seen some lessons na ang components, current account, financial account, tapos meron pang capital account. No? So sa atin, yung capital account, part na rin kasi ng financial account yun. Okay? Capital account can be described in other lessons as, as intellectual properties, like capital. Ayan. Okay? No, not capital, copyright. Ayan. Okay, so these are examples, no? So meron silang capital account. Pero merong current account talaga at saka financial account. Okay, so I'll just say that don't be confused because there might be slight deviations, from what we are learning from here in our lesson. Okay? Next, income balance. No? Income balances are returns or profit from investing abroad minus returns paid to foreigners for investing in our country. So returns, profit. Okay? So it's a plus if profit is paid to us, in our country because we invested abroad. Example would be Jollibee Food Corporation. Jollibee Food Corporation invested in this company, the coffee bean and tea leaf, abroad in the US. So they invested there. So when that company earns money and it declares dividends, so that profit sharing will be paid to Jollibee Food Corporation. That's a Filipino company. So that's money coming into our economy. So we are being paid profit. Okay? So the same with uh, a company abroad, let's say a US company or an American businessman, let's say they invested in Jollibee Food Corporation, and then Jollibee Food Corporation paid them profit sharing. Okay? That's money coming out of our country because Jollibee is in the Philippines and they are paying foreigners because they invested in our country. You pay them their profit. Okay? Part of the profit. Do you understand? So income balance, class, is you just follow the profit. Follow the profit. Okay? Now, balance of transfers, these are cash donations, cash gift. So cash gift from abroad given to our country, that is a plus inflow of transfer. That's money coming into our country. Now, if the Philippines donates money to another country abroad, we give financial aid abroad, that's outflow of money. That's a minus. So that represents money coming out of our country. So it's an outflow of transfer. Okay, money coming out. What's important to understand here is ideally what we want is more items with a plus because that means we are headed towards a surplus. Di ba? Surplus. Ibig sabihin marami tayong surplus wealth, surplus money in our economy. So ideally, gusto natin yung mga items na papasok yung pera. We do not want a minus because that is nearing a deficit. No? Deficit parang meron kang pagkukulang. No? Meron kang backlog. Okay? So, we ideally we do not like that. Ideally. Okay? So, this is what's important when trying to understand the balance of payments. Okay? Next, the financial account of the BOP. So the two items that are most important is the foreign direct investment and the security investment item. Itong net financial derivatives, no, ano lang ito statistical discrepancies. Some items that may cause differences so that the balance of payments cannot balance, no? Okay, sa iba, siguro mapapansin niyo ulit na wala naman itong net financial derivatives sa ibang text or lessons. Kasi sa textbook natin, kasama yung net financial derivatives. That is why I am including it in our discussion. But in some texts, you will see that the financial account is composed of foreign direct investment and security investment only. So again, tulad nga ng sinabi ko, mayroong slight deviation or difference from what we are learning here. Okay? So let's go and discuss the two that is most important, FDI. FDI, foreign direct investments, refer to physical investments, no? Purchases of fixed assets such as factories, equipment, land, building, abroad used in manufacture and sales of goods and services. So, it is a plus if a foreign entity buys land, building, a factory in our country. Okay, so when they buy something in our country, they bring in their money. So that's money coming into our economy. So that's a plus. Okay. Now, If we buy abroad buildings, a factory, no? Let's say a Filipino company buys a factory abroad, that's money coming out. FDI, domestic assets abroad, it's a minus. Okay, it's a minus. Example is, do you know who owns Emperador Brandy? Thank you, Catherine, Jella. Andrew Tan. Oh, tama, si Andrew Tan. Binili niya yung fundador. If you are familiar with fundador, it's a Spanish brandy. So, binili niya yung vineyard, yung distillery. Example yan ng foreign direct investment abroad. Filipino-owned company. Money coming out, of course. Okay, so in Spain, if you look at the vineyard, no, of Fundador, there are two flags flying. The Spanish flag and the Philippine flag. Oh, see? Before, it was the Spanish flag waving in our country. Oh, times has changed. Yeah? Okay. So nice to know about that. So that's an example. Next, security investment. So this account will represent money used for buying or selling portfolio assets. Assets like stocks and bonds. So marketable securities, no? Or minsan tawag nila dito financial debt instruments, no? Debt instruments yan kasi. Utang naman talaga yan, di ba? Pag inisip mo, no, yung pag bumili ka ng bonds, no? Technically, you're lending the government money and then they'll pay you later. When you buy stocks, you're lending the company money so that for their capital, they'll pay you later. Okay? So, ayan. So, the money is used to buy shares, to buy bonds. So, when a foreign entity purchases domestic financial assets, that's going to be a plus. That's money coming into our economy because they bought shares or stocks. Let's say an American businessman buy shares of stock of Jollibee Food Corporation, San Miguel Corporation, Meralco, okay, and so on and so forth. No? So that's money used to buy shares. Or if they invested in Philippine treasury bonds, no? Philippine government treasury bonds. Next, if we, a Philippine company purchases foreign financial assets or securities, if you're a businessman or a businesswoman and you bought shares of stocks of Apple and Microsoft, no? So that's an example. Your money is coming out of the country that will be represented as a minus. So because we are purchasing foreign securities. Okay, so that's money coming out. So the money here is for buying shares or bonds. No, it's different from income balance, di ba? Kasi yung income balance follow the profit. Di ba? Yung pera dito, kita na. Di ba? Kung kumita na yung investment mo na bonds or shares, ayun. Okay, ito yun. Pero dito, the money is used to purchase the shares and the bonds. You follow? Okay, so you take note. Dito nalilito sa mga examining students, no? Net financial derivatives. These are just statistical discrepancies, no? Kasi in reality kasi hindi naman nagbabalance yung balance of payments, no? But we have to make it accurate, no? We have to make it close, of course. So there are items that very difficult to monitor. Like for example, illegal trade, smuggling. These are, if you look at it, technically they're also imports and export, but they're not monitored because it's in the black market. So there is no accurate data for it, but this can cause some discrepancies in the amount of money in our country. No, it will make a difference in the amount of money coming in and out of the economy. Okay, so these are net financial derivatives. Okay, questions? Take note of this also, class. No? Yung risk premium. This is the risk paid for sure, another question. Another question ba? Wala na. May nagtatanong pa ba? Wala na. Risk premium is, it's like a bonus because you were willing to invest in a risky business, or you were willing to invest in a country that is having some problems like recession. Okay, so the country or the company pays their investors a little bonus. This is the added return. It's like added money, bonus required by investors for risk associated with the risk or asset they are investing in. A negative security investment, or when there are few foreigners who purchase financial assets for fear of not being paid, the investor may require premium risk. Example. Halimbawa, may recession sa bansa natin, or hindi maganda ang image ng bansa natin sa mga investors. The government will pay risk premium. They will use this in order to attract more investors. Sige na, mga foreigners, mag-invest kayo sa bansa namin, bibigyan namin kayo ng bonus for investing. So you call that risk premium. Okay? So ginagawa yan ng mga countries, ginagawa din ng mga corporations that are deemed, or they have an image of being a high risk investment.